Inflation report and banking failures. Oh my. This is Dave with the Bolduc Realty Group. Welcome to my weekly real estate market update. Today's March 16th. I'm recording a day early because I'm traveling to visit some friends, celebrate a birthday and St. Patty's Day. So some of the information, especially the number of houses active on the market, will be a little bit out of date. We'll talk about that when I get there. Before we jump into that, please like, subscribe, ring the notification bell. Comments are always appreciated. I've had a few comments recently, great questions. I do appreciate the interaction there. So let's jump into the key Connecticut stats. The first thing, active on the market. As of today, Thursday, there's 3,318. That's down significantly from last Friday with 3,455. But I do expect to see that number go up. As I said before, the number of houses going on the market increases as you get closer to the weekend, and especially Friday and Saturday, there's a lot of new listings. So I do expect that number to go up, and hopefully it'll be another week of more active houses on the market than we had the week before. And also remember, inventory is seasonal, lower in the winter, higher in the summer. And as we're going into spring right now, we are seeing more and more listings, and that's perfectly normal. We closed 2,100 houses in February, and we got about 1.5 months of inventory right now, so pretty low. Looking at the key dates we've been talking about, the February jobs report was out on the 10th. CPI and PPI came out on the 14th and 15th, and retail sales also came out on the 15th. So the Fed's pretty much got the information that they're going to have going into their meeting, so we'll see how that plays out. CPI, which is retail inflation, which you and I pay, was in line with expectation. So it was up 0.4% from January to February. And it was up 6% from February of 22 to February of 2023. To put that 0.4% into perspective, if in January you bought a bunch of items and it cost you $10, in February those same items cost you $10.04. That may not sound like a lot, but those pennies do add up over time. So producer price index, PPI, which is the wholesale inflation number, that came in lower than expected, which is good news. So the January to February number was down 0.1%. That's great. And the year over year, February 2022 to February 2023, was 4.6%, which is lower than the expected increase of 5.7%. So that's good news. And again, putting it in perspective from January to February. In January, if you had paid $10, in February, you're paying $9.99. So again, small change, but we'll take it. Going into the retail sales, they were down 0.4%. This is what was expected. This is down 0.4% from January to February. It's what was expected. It's good news. And hopefully all this information may result in the Fed doing a quarter point increase versus a half percent increase. We'll see how that plays out. And we also saw in the mortgage market all this stuff playing out in real time, because the mortgage industry tracks what's going on in the real world. And we saw at the end of last week with the jobs report and then all this issue starting to happen with banks, mortgages went up over 7%. And then as everything settled out with the banks early in the week and the inflation reports came out and they were pretty favorable, interest rates came right back down, and now we're in that mid-6 range. So that's a good thing. We've also seen some, like I just talked about, bank runs, and we've seen the government step in and shut down some banks. Full disclosure, I'm not a banking expert. I'm just giving you my 2 cents, and my 2 cents is this. It seems to be primarily contained in banks that are dealing with the tech sector, specifically startups. These are companies that haven't made a profit. They're living off of venture capital, and capital is getting more and more expensive to get, and there's less and less of it. So companies that are weak, that are not performing well, are going to fail. It's unfortunate for those that are involved, but it is reality. Are other banks going to collapse? I don't know. It's possible. I have seen articles saying that there are other banks at risk. We'll see how that plays out. Does it impact the real estate market? Well, maybe if it's local bank that collapses and it's a big bank in that area, but the larger market, no. And getting a loan may be a little bit harder, but it's not impossible. So real estate is still a supply and demand issue. So supply is very low, especially here in Connecticut, And I just don't see this banking industry issue being a huge impact on the housing market as it stands right now. Talking about the primary mortgage market survey, we're at 6.6% versus 6.73 last week. So we are down. That's a good thing. And hopefully we'll continue that trend down. Mortgage rates were creeping up based on the jobs report and the bank issues. Good news midweek really helped things out, and we're moving in the right direction again now. The Fed has everything that they need to make their decision. It's just a matter for them to have their meeting and let us know what they're going to do. Let's hope for the best on that. That's what I have for today. Comments and questions are always welcome. Have a great weekend.